Welcome to Alpha Insights. I'm Harper. We're taking a quick look at state-level cannabis policy and sales headlines with Drew, our tech sector analyst who follows the cannabis space closely. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Harper. Glad to be here.
Quick housekeeping. U.S. stock markets are closed for President's Day. So when we talk prices or market signals, we'll reference data as of Friday, February 13th. And note that trading resumes on Tuesday, February 17th. Okay, let's start with Missouri. What happened there?
So, Missouri put out some pretty headline-grabbing numbers. Their regulated market did about $1.5 billion in retail sales for 2025, and roughly $1.3 billion of that was adult use purchases.
Wow, that's a big market. What does that mean for investors?
I mean, when you look at the data, it's a clear demand signal. Missouri also generated $255 million in cannabis tax revenue, with about $151 million to the state and $104 million going to local governments. Those figures show the legal market can scale and produce fiscal benefits, which tends to attract capital and makes the business case for expansion in nearby states.
So, does that help multi-state operators? Or is this more about local retailers?
Both, honestly. Multi-state operators with retail footprints benefit if states show predictable demand and tax receipts. It supports steadier revenue projections. Retail-focused chains get a green light to double down on expansion. The key is scale. States that demonstrate consistent sales make it easier for operators to justify investment and for lenders or equity investors to back them.
Interesting.
Right.
Let's shift to policy. I heard Chicago and Nebraska had notable developments. Can you walk us through those?
Sure. In Chicago, the mayor vetoed a proposed citywide ban on intoxicating hemp products. That keeps edibles, flower, and vapes on the market there. And in Nebraska, a number of congressional candidates publicly pledged to protect medical marijuana access and push back against federal intervention. Those moves reduce near-term regulatory uncertainty in important local and regional markets.
So fewer surprises from a regulation standpoint, at least for now.
Exactly. Policy wins like a veto or public pledges matter because uncertainty often compresses valuations. If regulators and politicians signal they want markets to operate, investors get more comfortable underwriting growth. And to add to that, adjacent policy conversations are active. New Hampshire advanced a bill to legalize regulated therapeutic psilocybin, which could open a new regulated market for certain operators. But debates continue on issues like taxes and THC limits. Those can materially affect how fast legal markets displace illicit sellers.
Which brings us to Pennsylvania, right? What's the headline there?
Pennsylvania is projecting about $729 million in first-year cannabis revenue. That's big on paper, but the real question here is, how high will taxes be? High tax rates can push consumers back to illicit channels, which would blunt that revenue and hurt legal operators' growth.
That makes sense. So for investors, tax policy is a growth lever and a risk.
Exactly. Watch legislative calendars and proposed tax structures. They change the math on market size and pricing power.
Short thought. How should listeners track sector sentiment between now and when markets reopen?
Look at a few things. Flows into broad cannabis ETFs and operational reports from state markets. Retail sales and tax remittances are key. Also watch big operators like Tilray, Curaleaf, Green Thumb Industries, and Trulieve for early signals on revenue and retail trends. Those names move sentiment for the whole group.
Yeah, that's a good point.
Honestly, I was a bit surprised by the scale in Missouri, but it demonstrates why selectivity matters. Some companies are better positioned to benefit from scaled markets and favorable local policies.
Short reactions. Prospects look better on the margin because of policy wins, but tax policy remains a big wild card.
Exactly. And the takeaway for investors is to be selective. Watch state-by-state dynamics and pay attention to retail KPIs and tax receipts as near-term indicators.
All right, wrap it up for us. What are the main takeaways?
First, Missouri's $1.5 billion in retail sales is a strong demand signal and a useful benchmark for other states. Second, local policy wins, like Chicago's veto and Nebraska pledges, reduce short-term regulatory risk and support sentiment. Third, watch tax structures in large states such as Pennsylvania, because high taxes could slow legal market growth and keep illicit sales in play.
Great. If listeners want to follow up or ask a question about their portfolio, where should they go?
You can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai.